Hello and welcome. I'm Nidhi Sinha, editor Outlook Money, and I have with me today Mr. Anup Bagchi, MD and CEO of ICICI Prudential Life Insurance. Ever since he took over this new role in June 2023, he has been heard talking about making life insurance simpler, which is a big positive for policyholders. In an interview, he also highlighted the importance of 3 Gs, which is growth, growth, growth. Now the question is, will this growth translate into better returns for investors, and what can make life insurance products simpler? In this interview, we'll talk about all this and much more. Welcome, Mr. Bagchi. You have recently talked about making life insurance simpler. So what do you suggest? What can insurers do to really make it simpler?
When we go out to the customers, what we have tried to do in ICICI Prudential is listen to, we have a 18% direct channel where we ourselves sell, our employees sell.
Okay.
So there is a lot of calls that we get, and there is a lot of direct customers who come to us. And so we have got now an inventory of all kinds of queries which are of the anxiety nature. So we have made a full inventory of it. And one of the things that really comes on top of it is the whole issue about complexity. They don't really understand the policy document. They don't really understand the terms and jargons that are used in the industry. And so they are anxious because they are not very confident about what they are buying. And whenever I have seen, across BFSI, because BFSI is the only sector where I have experience of, that whenever there is complexity, customers shy away, even if the product is good.
Right.
And wherever there is simplicity in the product, customers flock to those products. So one of the things in life insurance we have seen is it is complex, it is a bit hard to understand, and on top of it, because these are long-term products and it has illiquidity, so it's not fully liquid. The products are not fully liquid, so you in a way get in, and there is a cost of getting out. If you want to get out, you can get out, but there is a cost because surrender values are not that high and all of it. And so when you put all of it put together, then customers are a little bit shy and anxious when they buy. You have to explain it to them patiently, and then of course they buy.
Right. So you were talking about the jargons, but certain jargons are intrinsic to insurance. For example, if you talk about, say, pre-existing diseases, I mean, you cannot think of insurance without understanding these jargons. So what is the solution for that?
No, the solution for that, what we are trying to do is that the questions that we ask, for example, in medical. So, for example, in a life insurance, there are 3 things typically that are required. One is KYC. So we need to do the KYC of the customer. Now it is all fully digital, so it's easier. Second one is income estimation, because your affordability of premium, otherwise they'll default on premium payments if it is not affordable. And third is on the medical. So medical really sort of 2 things. One where they are just disclosing, and one is accepting. In that case, because there is no validity of the disclosure,
right.
Sometimes it's an issue at the time of claims.
Absolutely.
Then what we have started to do is video and telemedical. We have started to do now in a very large way, and there is doctor on the other side, and they ask questions from them, and then of course you go through the full medical. What we have tried to do is, and we are now going to roll it out, is you can make the questions easier. You can just ask, are you taking medicines?
Okay.
Rather than saying, are you under medication?
Right.
So the whole thing is that, words should mean the same thing in simple things. And I'm so happy that now IIT also has set up a committee to simplify words which are legally enforceable. See, one of the reasons in all industries, it's not only insurance industry, one is very hesitant in long-term product, one is very hesitant to talk about loose words. What if it doesn't stand the scrutiny of a legal system?
Right.
And so you want to make it very complex, and you want to make it very watertight. And sometimes, in the overzealousness of making it complex and watertight, you end up basically mystifying it too much. So what we have tried to do is, we have gone through all our questionnaires, every question that we have tried to make it very simple. We have also taken it through our legal and compliance so that it is enforceable. but it is simple and customer should be able to answer it in simple terms. Pre-existing disease means आपको कोई आप किसका medication ले रहे हैं and आपकी कोई disease है अभी, and also to explain to them that it doesn't mean that if you say that I've got a condition you are not going to get insurance, is to say that we may charge a little bit extra premium, but it is better to be covered than to be uncovered. So I think a little bit of simplicity. Always, I know of no sector which if you make it more complex you can scale up better.
Absolutely.
Nothing. मैंने तो एक भी नहीं देखा. I have never seen a single sector. I have seen you simplify it, customers understand better, their trust increases, they buy.
Right. So, but do you think that agents and sellers can also have a role to play? Because ultimately it is that one-on-one discussion that finally makes the deal go. And recently the regulator came up with this customer information sheet, something similar to mutual fund industry, which might make it easier for customers to go forward and understand the policy. What are your views?
No, absolutely. Actually, 20 years back, credit card industry used to be very complex and nobody understood what they are buying, and because there are reward points, there are charges, there are all of it. So 20 years back, RBI came out with MID, most important terms and conditions and document, and SEBI has it, and I'm so glad that IRD also has it, because people must know what they are buying, number one, and people should be clear what is the contract, how much you have to pay, for how long you are going to pay. If I require money, can I get it, number one. If I get it, at what cost will I get it? If something happens, where do I lodge my claim? Where do I get my claim? I think there are 7-8 things which customers are interested in, and that should be told upfront, and that should be understood upfront by the customers. And it is possible, and now IRD has done it, and I think it's a very progressive step, and trust will increase, and when trust increases and if the products are good, then customers come, because life insurance products are not a substitutable product. There is no substitute for term insurance in BFSI. There is no substitute for annuity. There is no substitute for reinvestment risk, long-term guaranteed product. There is no substitute. Most of the products in BFSI are pass-through. NPS is a pass-through product. Your mutual fund is a completely pass-through product. And so it's very important that customers really understand, and when it is enforced by a regulator, then I think the overall standards of the industry also come up. So I think it's a very progressive mood. And from ICICI Prudential perspective, what we have tried to do is that we have to try to put the pitch in video in 30 seconds.
Okay.
So that in 30 seconds you should be able to explain to customers these important things. And so when you have a support of video, then you don't have to train them that hard, because you can run the video. And now what we are starting to do is, after your policy is done, you're going to send them customized videos, because they exactly know what they are getting. And we are sending these videos also to our distributors, so that when they are explaining the product, you run the video so that you don't miss out on an important thing. Because at the end of it, we must understand that finally we are dealing with people. And when we are dealing with people, and when you are discussing, some things inadvertently may get omitted, some important thing may get missed out, and so it's important that if you do it centrally, and if you do it in a organized manner, and if you do it succinctly, and you take it through the test of simplicity, I think the chances of clear, crisp communication is high. And it is an attempt that in ICICI Prudential we will really run it. We are already doing it, but we will really run it like a crusade.
Okay.
I think it's a very big unlock for us, for the industry, but definitely for us. I think customers must understand. They are paying premium. They must understand what they are getting in return.
So, in fact, another move that IRDA has taken, and not just now, last few years, there have been a slew of standard policies in every domain. How do you think they fit in? Because, with the innovation and technology, a lot of things playing out, there is a lot of buzz about customization as well, but then there are standard policies as well. So what is the balance between the two?
No, my experience is that customers want options, But when you give them unlimited options and when it is complex, they will get confused and they will not buy anything
Okay.
because they are not confident about buying. And so customization works best when customers understand that category.
Right.
Then customization works well. When customers don't fully understand the category, customization can confuse them. And so a good method from a behavioral finance perspective is to give customization, but you also standardize some of the products that they can give.
For the entrance.
So 80% of the customers' need will be fulfilled by standard products, and if somebody wants to customize, they can customize. So actually, IIDA does not prohibit. IIDA
Yeah,
gives
that's
you,
true.
it doesn't prohibit. So it is for people like us to actually come out with standard products with customization, so that people can take whatever they want, yet they end up taking the standard products. If you don't give option, then customers might say that I don't have an option.
Okay.
When you have option, doesn't mean that they necessarily exercise. The responsibility is on large players like us, large brands like us, to give customers a good product, largely a good product, which they can buy on trust. That the outcomes that they want will come out of it. Underwriting will not start when I lodge a claim. That is not when questioning will start. That after we are on board the customer, when a claim comes, it should be paid.
Okay.
That should be always be the dictum, and that's a philosophy of ICICI Prudential also.
Right. But, it is not uncommon where, sometimes kids, the parents buy a policy
Yeah,
for
yeah.
children.
Yeah.
And then, as they grow older, then they would realize that the outcomes are not what they were expecting. So they find themselves perhaps
Yeah,
locked
yeah.
into the wrong policy.
Yeah,
But
yeah,
this
yeah.
whole thing of surrender within life insurance, it is expensive. You also mentioned
Yes,
it
yes.
briefly. What can simplify that, as in what can really simplify that and make people understand that, look, you need to look at these costs before you lock yourself into a policy which may not be suitable for you?
So our experience is, there are a couple of experiences we have of the customer. One is that what is the kind of protection that you are taking. Actually, we have seen that there are hardly any complaints on when they buy pure protection.
That's true.
Because why? Because it is very clear that I'm paying you money, I get protection. If I want to rent a protection, then I know that I'm not going to get back anything because I'm renting a protection, just like you rent a house.
Right.
You pay rent, but you don't get the house back. There are other ways of protection, like buying a house. So I give you a lump sum, my corpus also gets created, so I get a lump sum back, a corpus back. I also get a protection. So it is like renting versus buying.
Okay.
The complications, annuity, again, there are no complaints. Because annuity, you know that I'm giving a lump sum and every month money will come. And if something happens to me, my spouse will get. And if something happens to the spouse, my nominee may get. Or you may choose not to give it to the nominee. In that case, you get a higher rate. Again, if you see both of these, actually it is a simplicity, which is why there are no complaints.
True.
People are very clear what they are buying and what they are getting. Now, complications come in, and complication again doesn't come in guaranteed products. Because guaranteed product, everybody knows that I'm paying this, I have to pay for 5 years, I have to pay for 7 years. I'm going to get whatever 6.5, 7, 6, whatever are the prevailing rates. But whatever it is, it's a transparent, I'm going to get it for X number of years. There is no problem. There are two areas where there is confusion. There is very little confusion on the ULIP and the linked side. Because it is like mutual fund, people understand mutual funds. And people know, chalo, I have put money in mutual funds. Now it will go up, it will go down, whatever. I'll get a corpus, I'll get a return. NAVs are also published, and there is no surrender cost there. You get the full thing plus an interest, and that too tax free. So there is no issue there. Now the residual participating products, as it is called in life insurance, that is where, because these are all semi-guaranteed. These are like balance funds. Okay, where you get a minimum guarantee. You don't get the return back, a bonus is declared, the bonus is added on. So it's like reserves is getting created. Now those kind of products is where you have confusion that, when have I got a bonus, have I got the bonus, how much bonus will I get? It's very difficult to calculate how much you have got. That's where the whole issue is. So that is one part. The second complaints essentially, or issues, queries come that Now I have bought a policy and I have temporary liquidity, not permanent liquidity, temporary liquidity. Do I get a loan against policy? Do I going to get a loan against ULIP? Now that is not so prevalent. It must be very prevalent. Just like you have loan against FD, it must be really made digital. So ICICI Prudential, now we have started to make it digital.
Okay.
Digital. You come to our site, you have bought a policy from us, you click and take. In traditional policy, instantly you get a loan against that. That will give you a comfort of liquidity. That if I have a temporary issue, how do I get? In linked, because it comes under 20 lakhs, etc., we have partnered with other players
Okay.
who will give instant loans. The issue is, what if you have a permanent liquidity? That I require the money and I will not have money to pay later. In that case, you have to surrender the policy and take money. When you surrender the policy, first, the whole process of surrender must be made easy.
Has to be. And even the
I am
calculation, the way it is
giving
done.
you your money back.
Yeah.
So the whole process of the whole documentation of surrender has to be made easy, which we have tried to make it easy. Second one is, this whole calculation is a big issue.
Yeah.
Because particularly if it is, as I said, the participating type, then the whole calculation, how much is guaranteed, how much is floating, how much bonus I have given, how much discretionary bonus I have given, all that is very confusing. And the statements are also very confusing. At this point of time, I really do, and then you have surrender charges which come in.
Right.
Surrender charges which come in. That when you start to link it up with the original policy that you bought, it is, I will also admit that it's very hard to follow. It's very hard to follow. Whenever something is very hard to follow, generally what people do is they pick it from a brand where they trust that they will do a right thing. Just like in a medical situation, in a doctor situation, actually you don't know what's happening to you. You don't know what's happening to you, what kind of surgery will happen. You can ask 100 questions, but you will still never know.
Yeah.
In that case, what do people do? They go to a trusted doctor, they go to a trusted brand, they go to a big hospital. And they say that, they are going to be fair and they are going to give a return back. And you try and calculate whatever, and ballpark, if it is okay, it's fine. And so people gravitate towards larger brand. That is why life insurance, not so much in general, life insurance, you will see that it doesn't have a very long tail after a long period of time globally. You will always have, in all large geographies, you will have 5-6 players only. You don't have 30 players working. And it finally gravitates 30 players because of the nature of the product. You gravitate towards that, and so there the best way really is to think of it like a doctor. You are going there, you trust the brand, you trust the doctor, and you trust the return that you get. The other thing that must come up, which is not there in the ecosystem, is that if you see a bank FD, even your magazine, they run full page on bank FD comparison and all of it. Mutual fund, every 5 minute NAV update is happening in all places. In ETF. In NAV, every day NAV is getting computed. Actually, you will see that there is no such ecosystem in life insurance. There must be an ecosystem of comparison. Because when comparison happens, two things happen. One is customers' trust increases. They know that a third party is doing it. Because whatever we see, finally we are a conflicted party. So a third party must do it. And secondly, when a report like this comes, there is a pressure on everybody to up the game. And so disclosures and transparency always ups the game. And when it ups the game, it increases the trust of the customer. When it increases the trust of the customer, more businesses come. The good news is that this morning, IRDAI has come out with a draft product guideline where they are proposing a much enhanced surrender value on the non-linked business. And while all insurance companies will have to adjust to it, all distributors will have to adjust to it, because if they are used to upfront commission, it might move to trail structure. We will have to become more efficient. But I think it is very good for the customers because they exactly know what they are going to get. And we will also work with them to simplify it so that customers know it in simple. This is what you are going to get. And I think it is good for the customers because their cost of breakage comes down.
Yeah.
And everybody can have liquidity problem, and we feel that if it is temporary, one should take a loan. If it is permanent, breakage cost should be there. I'm not saying it should not be there, just like your prepayment premium, etc. It should be fair. It should be a fair breakage cost, and it should be a transparent breakage cost, so that customers know what they are getting into. Then I think trust will increase, and again the industry will move better.
True, true. So that's definitely a positive move for
Yes, yes,
customers, big positive in fact. But Outlook Money doesn't do daily anyways, just to put in a little
Nah.
word like that. But
Ecosystem does.
yeah, the ecosystem definitely does. I would agree with you.
Yeah.
But talking about trust, you have been talking about trust, but we have seen these some of the trusted brands also. I'm not saying all, and there is no similar color brush with which we can color all. But there are certain bank assurance channels, and misselling. A lot of times, misselling happens through say bank RMs or things like that, or agents. Unsuspecting people buying, senior citizens buying life insurance policies that they may not need, not annuity, something else, policies being, sold as SIP sometimes with monthly premium. So those kind of things are happening. But IRDA also, I think recently
Yes,
it said
yes,
that, review bank assurance, maybe that was the intention. So your comments on that? On where that will move?
I think it comes back to your question number one actually, which is the most important question. If you make anything complex, if you make anything complicated, if you make the processes very tough, then these kind of tendencies, there are chances of these kind of tendencies to come up. Because customers don't know what they are buying.
Yeah.
It is impossible, because I have been on the bank in for a very long time. It's impossible to missell a FD. It is impossible to missell a savings account.
Yeah, that's true.
Why? Because the customer knows what they are buying. So the answer to this is really to make all the other steps that we discussed. You make it simple, you make it less complex, let people understand what they are buying. Automatically all these things will come. See, all distribution in the world, across all sectors, they essentially play three roles. One, which is a very positive role, is they make the product available and accessible to customers. That's a very positive role that they play. Second is, if the product is very complex or the sector is very complex, they play a role of a translator. That, this is very complex, let me help you understand. Then what do they want to say?
Yeah.
And in the translation, there are many translation losses. And so the full thing is never sort of delivered, not intentionally, sometimes unintentionally also.
Sometimes maybe the, even the person selling may not understand it fully.
Exactly.
So that is
It's
the
unintentional. Third is, if the processes are very complex, then the distributor will say, come to me, I will help you navigate the process. So if all of us will remember, in passport office once upon a time, when it was not so simple, you always had an intermediary. Right. Always. Because the processes were so complex. In RTO, you always had an intermediary. The processes are very complex. You require somebody to navigate through. So the three things is, one, availability, accessibility. I think it's a very positive role that distributors play. And for the effort that they put, they need to be compensated. The second and third, really the insurance companies or whoever is the service provider in any website, it is their lacking. If you make it more complex, translation is required. You make the process very tough, somebody needs to help you navigate. So in ICICI Prudential, number 2 and number 3, full force, we are going to demystify, we are going to make the process very simple. So what we have done is pre-approved sum assured, just like pre-approved loans. What we have done is term by invite. We have done annuity by invites. So we have pre-approved customers for a particular sum assured. They can come, they can do digital KYC and they can buy the product instantly. Why we are trying to do this, and I am well aware that in insurance this is not a normal practice, but we are getting good response to that, is because if complexity is reduced, if navigation is not required and availability is made in online format and not by way of your neighborhood agent or your neighborhood branch, then customers will come, and the product is simple, customer will come and buy. So which is why our biggest two products sold, direct product, where customers come to us and buy directly. One is term insurance, the biggest category
Yeah.
is term insurance, and the second biggest category is unit linked, because they understand reasonably markets NAV, they understand term is what you get. These are the two things.
So, but are you saying the traditional plans, the demand is lower now?
On online, where customers come
Online.
and buy.
Okay.
Demand is very high, but because of complexity and what they go through the other channel. Annuity, there is a demand, but what happens, that segment of the customers, they are not so tech savvy, so they don't come. But we feel that over a period of time, the younger people, when they become older, because they are now native digital, annuity demand will also come. So three places where term will move towards buy online, annuity will move towards this, and at the back end, what we have to do is pre-approved sum assured, because everything is now available in a pre-approved manner. KYC is fully available. You can do digital KYC, income estimation you can do, and if you are particularly, catering to a particular kind of customers, then you don't require medical. So, and that there also we are sort of, working how to make questionnaire in such a way so that it is easy for customers also to disclose fully and disclose well,
Right.
and not sort of misquote things which can land up in issues later. And that is what we are doing, and I feel that there is a societal shift also. We can sense it, that there is a societal shift happening in these, because our growth rate in direct channels is the highest.
Okay.
So very clearly this is working, because customers are coming on their own, we are not going to the customers.
So, but what about the cohort of 50s and 60s, the people who actually need annuity? Right now, they may not be so digital savvy.
Yeah. So
Is
they are
there-
going through the other channels. They are not coming. They are not buying online as much. They are going through other channels. Not because of complexity and process. It is because they are not so digitally savvy. But the good thing is, if you see the trend, a 35-year-old person who is like fully digitally savvy after 25 years, the chances are that he'll be 60 only, and he'll require annuity.
Right.
So it's a patience game. In 10-15 years, this will start moving. And so simple products, less complex products, where the contract is understood, what you pay, what you get is understood, it will move.
Yeah.
Which is why even in mutual funds, if you see, PMS and AIFs are not the ones which go online.
Right.
You will see SIPs happening,
Yeah,
and
the
SIPs
simpler
happening
ones.
on simple mutual fund. ETFs are happening, index buy is happening. Simplicity, good process, low complexity, that will sell. And we have to work very hard as an industry to make that happen, because the need is very, very large.
Yeah.
We have a very large need for life penetration. We have a very large need for loan penetration, loan protect. We have a very large need for retirement. So the needs are extremely large.
Yeah.
So that is where the unlock opportunity also is
Yeah.
for players like us.
Finally, sir, recently in an interview you said that ICICI Prudential is focused on the 3Gs, and which is growth, growth, growth. So what can investors expect, and what is the way forward for the company?
Actually, luckily for us, risk and prudence, we have absolutely zero issues. We are very, very solid on risk and prudence. We manage the investment. We have zero NPA since inception. So we manage that book, so we don't have to worry about that. The first block, so 4 blocks we are working on. First block is process, policy, service. If you look at our claims ratio, we are number 1, and claim settlement is nearing 99% now. And so that is very important for us, because that's where the sort of moment of truth is. Second was is on the product side. So we have come out with slower products. Products are very good. We are trying to make it even more customer friendly products, and feature, benefits and affordability. All 3 we are working on. Third, then we are working on distribution, because we have now a lot of distribution partners we have got in the last 2 years. So now just deepening through a partner stack. So we have come out with partner stack, which will work very well with them. And we also embed our processes in their processes through APIs, etc. So that the process, so you have to get the process, policy and service very smooth.
Okay.
Product you embed, and you link it up to the distributors, so that they have to do the selling part. The complexity and the process part we take over,
Okay.
and make it very easy. And so there is a large proportion now where we are doing same day issuance. So you give all the documents, we do same day issuance. and thus will deepen the distribution. And deepening of distribution essentially means that you partner with them and increase the cross sell of insurance to their customer database, which is happening. And then also from the fourth block is really working from the customer's end to increase the awareness, to increase the consideration set, and so that when there is an intent to buy, they know that where the product is available and how it is to be accessed, and that the process, policy and product should take over very quickly. And that is where we are going to generate growth from that. I mean, growth has been okay, last 2-3 months growth has been okay, but I think we can still do more because we have invested in those channels, and those channels slowly, as the channels come up, I think the growth will come. So the growth is, when we see growth, essentially it's a long-term product, risk-adjusted growth, good quality growth, because low persistency gives bad experience to the customer. So good quality growth, good claim settled growth, because if you get if you do bad onboarding, at the time of claims there will be an issue.
Right.
So we are very sort of focused on that. And if you see the disclosed number, our early claims is among the lowest in the industry, because early claims is a sign of not so good onboarding.
Yeah.
Okay, because what does high early claims means? Early claims means that somebody is cross subsidizing this, and so the growth is the outcome, but underlying these are the 4 foundations on which we are working to give good quality growth. And also as the trust markers increase in the market, and I think IRDAI is doing a very good job there. They are actually, if you see, they are really solving some of those trust issues in the market, increased surrender, simplifying policies, use and file, you can come out with good products. So very high focus on persistency, high focus on claims. Once the trust marker comes up, I think and there is already a latent demand, which will convert to an explicit demand when the trust comes up and simplicity comes up. So I think very sort of happy, hopeful, and positive about this sector. It's a tough sector. It's a tough sector because it's a very long-term policy and it's illiquid for the customers. But it will happen. World over, if you see, life insurance companies are very large companies, and they are compounding companies because they create corpuses over a long period of time. It compounds, and money stays with you, and customers don't redeem. Because customers who want to play momentum, there are other ways to play momentum where there is liquidity, and that is really where they should go.
Right.
If you are building corpus, then you should stay in a semi-disciplined manner. Only then corpus can get built up. If one keeps redeeming and investing, you never make money.
Doesn't
actually.
work,
You never convert money to wealth. Money will remain money. If you want to convert money to wealth, then you have to compound over a long period of time. And in some ways, I have seen that a little bit of discipline helps. Actually, if you go back in time, EPFO never had liquidity, PPF never had liquidity.
True.
But that's where our parents compounded money. Insurance also doesn't have liquidity. So put only that much where you don't have an immediate need for corpus building. If you want liquidity, temporary liquidity you can get, but if you are not very sure of your permanent liquidity, then take only term protection and take it on rent. Don't buy.
Okay.
Because if you really don't pay the premium, then the benefits of the products are lost. That is sad. So if you look at the hierarchy, you have EMI. You should protect the EMI, because if something happens, then what happens to the credit life? Then you have consumption, you must protect the income again through a term plan. So both are pure risk. Then the surplus that is getting created, if your liquid surplus is small, invest only a small portion in life insurance to compound. Larger portion you to keep it in FD, mutual funds, and many other products are available which are of liquid kind, gold, sovereign gold one, and all of it. The moment you start generating a little bit higher surplus, take out that money and put it in life insurance product. Because over a period of time you get tax benefit, you get benefit of switching cost in ULIP. So tax adjusted, they are much better products. Although the normal dictum is that plus a fund is greater than ULIP. Actually, it's not so, because ULIP, up to 2.5 lakhs is much better tax adjusted, and people must look at tax adjusted. Every time you redeem and put back, you have to pay tax.
Yeah.
And so actually there is a loss of return
True.
when you do that. Here switches are free, long term you get tax benefit, and in some way you are disciplined and forced to keep the money to compound, and that's a very important thing for the customer in financial planning. So EMI, income protect, surplus then you put for corpus. That's the way
And then
planning should be done.
invest. Thank you so much, Mr. Bagchi.
Thank you.
And to our viewers, that was holistic advice and a lot of takeaways that we have from this interview. See you soon.